All right, everybody. Here we are again, together at last. It's Thursday, November 1st, 2018. Really, the one thing you need to be looking at right now is the dollar. The US dollar is getting pounded right now. And because of that, believe it or not, gold and silver are higher. Let's see how long that lasts. I mean, we all know how this works. But seriously, the dollar is taking a big hit this morning. And all of you know, because you follow this blog, that this is very stock market positive. Let's talk about that just a minute. When the dollar weakens like this, not only is it good for companies involved in international trade, but it's also a sign that tensions globally are lessening, okay? Because the knee-jerk is always into the dollar, into the dollar, into the dollar when there's, some kind of an issue geopolitically. Okay, so the weakening dollar right here, I mean, it's down pretty big, is a tell on top of being just bullish. Because again, like I explained to you, a weaker dollar is good for companies that trade overseas. Very simple concept. You all know that. However, there is one other thing going on that we got to watch. That U.S. 10-year yield is creeping higher. The effect of that is definitely being offset by the dollar weakness today. But we have to watch this. If the dollar decides to reverse here and we get a rising yield along with the stronger dollar, that's very stock market negative, okay? You all know that. It's pretty straightforward. I'm not really sure why bonds are selling off here. Nothing major. They are selling off, but again, these are things we need to watch here. And let me just say this too with regard to the dollar. It's not so much its number with regard to the Dixie. You have to look at everything in its current environment. How many of you have heard me say like a million times that we trade the market? We have. Well, this is where we are now. So you're not going to really be looking at what one number might be. It's in context of what is going on around you. You understand? Pretty simple, pretty straightforward. So, as I am doing this video blog, stocks are higher across the board. Nothing major, higher nonetheless. And the dollar is getting pounded. But 10-year yield is creeping up. So again, we all know there exists a compensatory mechanism here, but we have got to watch this. Look, just keep your eye on a reversal. If that dollar reverses for geopolitical reasons, someone shoots off their mouth, that's going to be stock market negative. With that said, I'm going to let you all go, but have a look, if you get a second here, at my stock screener that I just put up for you on my website, traderschoice.net. There's a link in the description of this video, right side of the page. You can see it update there. There's a lot of strong sells now. There's a lot of strong buys. You might want to have a look at that if you're looking to get into something here. All right, with that said, I'm going to let you all go. We'll sum this up at the end of the day. Over and out.